Okay, we are live. I can finally record some audio for this channel. Um, so what we're going to go through is, this is my basic algorithm here. And what it does is it takes a lot of the studies that are in ThinkOrSwim, and I kind of chose the best 20 or 30 of them and created one basic algorithm. And it seemed to work pretty good. So like for Amazon here, so anything above this green line would be a buy. Now as you can see, I got two different charts here. These are two very similar algorithms, but different in a way. So as you can see here on this one, the top one gives me a buy right here, but it doesn't give me a buy signal on this one until right here. So I usually wait when this one crosses, I wait for the bottom one to cross too. And as you can see, this is a better buy point than this was, let's say over here. So this would be a sell. Now the sell, as you can see, it's a little bit early here also, if you just use the top one. So if you wait for the bottom one to cross over, that's a better time to sell. Now, what I decided to do, because this didn't work well with all stocks, here's the screener I do just to kind of weed out some of the better stocks out there, you know, based on market cap and the implied volatility, just kind of make sure that it's an option. I want ones that trade options. And, you know, volume. And this average volume one, let's see, is there, yeah, this longer average volume one kind of takes out stocks like Airbnb or any stock that just became an IPO in the last year, because I need at least a full year's data to get good numbers. Now, what this number is basically it's normalized, so it's between 0 and 1. And what I do is I'll take a study, let's say beta, and I'll look at how well the stock does. And I really don't want to show all of this, but it'll take the beta value and compare it to the future price. So let's say beta is really low right here at this point for Amazon. And as you can see, a week or two later, Amazon's up pretty big. So, and then let's say that beta was high at this point, and as you can see, it came down. So there's a correlation. Basically what I'm doing is I'm looking at correlations and then taking those. So stocks like Tesla don't really work very well. And there's probably good reason, because there's, like at the end of last year, I think there was a lot of FOMO, or fear of missing out here at this point, when the stock started climbing up and then people just started piling in. I have my own theory about what happened in January. I think the Chinese have something to do with this. I've heard about similar like Robinhood companies in China that allow small investors to get in, and probably might be able to get in anonymously. But that's an assumption. But I think that pumped this way up. And I think that's why you saw also why Alibaba and a lot of Chinese stocks came down, is because Chinese investors were getting out and pumping up certain stocks. And the reason why I say that too is because there's a lot of stocks that should have gone up with, let's say, GameStop or AMC, but did not. And I feel that these stocks are more known to Americans and less to any foreigners. So that's what makes me think that the Chinese are involved with this GameStop and everything else, because it's something they can easily figure out is a possible good stock. That doesn't even make any sense. But anyways, I think the Chinese had something to do with this pump up. So getting back to a Tesla, I would say it's more on this range in between these two lines. And this is all just hype. So it's numbers looking back over last year. There's not going to be a very good correlation in between any indicators and the price of Tesla. Now, I think this range right here, like the last 6 months, is a very good trend, you could say, that you could use to make future predictions. So what I did, and this took a lot of time, right here, each one of these is an abbreviation for a different study or indicator in ThinkOrSwim. So I went through just about every single one of them. As you can see, it's about, well, it's over 260. And then what I did is I ran it to this list of stocks, and this is a list of stocks that I had done a scan on using these filters. So what I would do is I'd basically look at the numbers for, let's say, Amazon for each one of these and then put it in. So this would be 49% correlation, which means it's pretty much Coinflip. This is 57%, getting a little bit better. Now, since I'm looking at a year's worth of data, I've looked at Coinflip. I ran a ton of Coinflips for, let's say, 250 trading days. So at the maximum I got is around 57%, or at the low like 43%. So it's a plus or minus 7% around 50. And that would be no better than a Coinflip to me. But if it got above 60, I'd say that is a good correlation. So let's say for Apple, this, let me see what that is. Accelerated DBP. Let's see. Cumulative distribution buying power. I'm assuming that's what that is. Let's take a look. Cumulative distribution buying pressure. Okay, so that over the last year was a good indicator for Apple. Now let's look at Tesla. Now this is the count of how many of these studies were either above 60% or below 40%. Tesla only had 5 out of 260 something. That's not a lot. So here's what I did. I took those 5 and I combined them into one algorithm. And since there was 5 here, I want the value to be in the range of 0 to 1. So you can see exponential deviation bands, leave it, convolution, money flow index, unbalanced volume, standard error. Those 5 gave the best correlation for Tesla. And where is my button? There it is. Okay. So let's get rid of that. So here I can see, here's how it runs. So let's take a look back. So at this point it was a buy. And see, it's a little bit, it missed, since it was a drop and then a spike right again. I would have almost had to hop in right here, right as it crosses this green line. And then it was just about a sell right there. And as you can see, that was a good time to sell. And then right here is another buy. And right here is another almost sell. But then here was a definite sell right here. It came down. So as you can see, it's been hovering right in the sell territory. I would almost expect this line to start going up because this is kind of consolidation here, I think. And I think this is one of those things where people are itching to buy in. So just looking at the graph and my intuition, I just think Tesla's going to go up, and I just don't think Tesla is a very good candidate for my algorithm, which I'm sad to see because this is the stock I want to, well, I don't want to trade Tesla. I'm investing in Tesla. So I guess I'm in for the future. So if I look at stocks I'm just going to trade, I mean, let's take one. AMD, Amazon. Alibaba's a good one. It's been down a lot, and I think it might be risk versus reward right now is looking really pleasing. So as you can see, 88 indicators seem to have a strong correlation. But let me pick one. There's another one. Let me pick the best one. Oh yeah. Okay, AT&T. So let's look at AT&T. What does it say now? Right now it's just below the buy level. So it gave a buy right there, and that closed at, so if you look at the close here, it closed at around 27. So 27 is a buy. And right now it's at 27, and it's just below a buy for some reason. Oh, this is, okay, oops. So I haven't created, wow, what's going on? So I haven't created an overall algorithm for AT&T, and it's definitely going to take a while with over 100 studies to add to it. But just looking at the general all buy and sell, it is just under a buy. And I'd say at this point it was a buy right back here. But heck, if it was a buy back here in August, the end of August, why wouldn't it be a buy here also? I don't know. I just go by my numbers. So as you can see, at this point it was a sell just before it came down. Now obviously that must have been earnings or something. So I wouldn't think my algorithm would have any effect on something it can't predict, like earnings. I mean, there's definitely announcements in there. Something must have been said. Oh, this was probably the supply chain disruption they probably said back here, which dropped it. How this saw it as a sell signal up here, I think is just coincidence. So I'm going to actually create this algorithm so that it'll ignore any stock that has earnings within a certain number of days. I just don't want to play. That's really rolling the dice. I mean, you're going to win some, you're going to lose some. Maybe it's a push. So that's it. That's what I'm going to work on. And as you can see, putting in all these numbers took hours and hours. And there's no good way to get this data out of here. There's no good way I found to export data out of ThinkOrSwim. And I think they do that on purpose. But so what eventually I'm going to do is I'm going to create a bigger algorithm. But that algorithm is going to be so complicated, I'm going to need these numbers to justify the algorithm, to make sure that it's working properly. Because if it gives me a buy rating, how do I know that I didn't screw up a decimal place or forgot to add something or divide something somewhere in the program? So all this data is going to come in very handy when I'm checking my algorithm. And so I'm going to work on one today and try to get that done for tomorrow. So that'll be September 29th. That'll be Wednesday. And we can see how that works. So I'm going to take one of these big ones. Maybe I'll take the biggest one, AT&T here. It's got 118, did it say? 114. that I have to add. Now, another thing I need to point out, this is a positive correlation. Anything above 60%. When you see it go below 40%, that means it's an inverse correlation. So that's another thing I'm going to look at. And that's it for now. And I hope you guys enjoy the audio recording over the what someone said was annoying music, and I completely understand. So, all right, talk to you guys tomorrow.